Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the massive drop on the Bitcoin price that we caught live in yesterday's afternoon video. We watched Bitcoin drop $10,000 in the span of nearly only an hour, and in this video, we're going to talk about what caused that crash, how we should be reacting to it. Should this be something that we're very scared of, or should we see this as an opportunity? I'm going to come here and dispel some fears today and give you some information that you might not have already had. So if you enjoyed today's video, make sure to smash that like button. But without much further ado, guys, let's go ahead and dive right on into it. Yesterday, starting right around 10 o'clock, there was a major drop on the Bitcoin price. Bitcoin fell all the way from $50,000 down to an absolute low of $42,500 in the span of just a little over an hour. This drop scared a lot of people, and I completely understand why, because if we look at the measurement here, Bitcoin dropped 15.5% in the span of 66 minutes. That is terrifying for the average investor, especially people that might be newer to the cryptocurrency space. And I know there's a lot of people that are newer to crypto that watch this channel, and you might be wondering, Jeb, what the hell happened yesterday? Should I be scared of Bitcoin? Is this the end of the uptrend? Is the bull market over? Is this the second lower high that we're seeing below our all-time high that we set 3 months ago? And are we about to go farther to the downside? Well, let's talk about that. One of the first things that we need to mention is the fact that there is something called leverage trading and or margin trading in the cryptocurrency markets. This is what is known when you are trading with more money than you actually have. So let's put it this way. If you buy a home and you put 20% down, let's say you're buying a $500,000 home and you put $100,000 down, then you are effectively buying that home on 5x leverage. What does that mean? Well, the ratio between how much the home is worth and how much you put down is 5 to 1. So you're basically using 5x leverage. You're using $100,000 to get $500,000 worth of value, but you're borrowing the $400,000. But you still get to control $500,000 worth of assets, even though you don't fully own it yet because you're borrowing money from the bank. Leverage trading on platforms like Bybit is the exact same thing. And by the way, there's nothing wrong with leverage trading. I think leverage trading is great if you are an experienced trader. But the problem is, if on an exchange you have the price go down too far, then something called liquidation happens. That is where you have essentially lost more money than you have in the market, and then you have to pay back what is owed to the exchange that you're borrowing from. In the same way that when you buy a home, you have to borrow money from a bank, you have to pay back that money, and you get liquidated. And what happens is the exchange liquidates or sells your $100,000 to cover the debt that you've now incurred because the value of the asset that you're in has gone down. So when that happens, that causes selling pressure. If people have bought on long, they have bought into the market on leverage, hoping that it's going to go up to $55,000, $60,000, and then it starts dropping very quickly. Then eventually they hit something called a liquidation price. When that occurs, the exchange liquidates their position. It liquidates what's called their margin. That causes selling pressure because to liquidate it means to sell, which drives the price lower. Guess what happens when the price goes lower? Then more things get liquidated and you get something called a long squeeze. It's a long because it is something that occurs when there are a lot of longs in the market, and it's a squeeze because it happens in a domino effect, and that's what it's called, is a long squeeze. So that's what we saw yesterday. That is technically what we saw. We saw $3.18 billion by one of my sources of liquidations across all different margin trading platforms yesterday, but that is not the only reason that this occurred. There was a lot of manipulation going on here, and while I can't yet point to exactly where it's coming from, I guarantee you that it is not a coincidence that the same day that El Salvador adopted Bitcoin, that Bitcoin crashed 20%. There is something to be said that people buy the rumor and they sell the news, and then after El Salvador adopted it, people sold it because, well, the news has come and gone and it's all been priced in. There is something to say for that. But this is not a coincidence. I want to be very clear here. I'm not a conspiracy theorist. I'm not pointing my fingers at anyone in particular, any major institutions, any major whales, any behind-the-curtain kind of deals. But what I am saying is that the fact that there was a massive crash right here did have to do with longs. It did have something to do with technicals, which I'll talk about here in a second. But I do believe there's manipulation going on in this market, and I'm going to do more research and digging to see if I can find out where it's coming from. But I can't tell you that right now. I can just tell you I've been in the market for 4 years, and this did not look organic. It looked planned. Anyway, looking at the chart here, there are a few things that are encouraging. Number one, Tom Crown, go watch his channel, by the way. He actually mentioned on Around the Blockchain yesterday that there was a uptrending level of support right here that Bitcoin pulled back to and tested. We pulled all the way back down to about $42,800. And we tested that level of support perfectly. Another thing to look at here is the fact that Bitcoin bounced off of the 200 daily simple moving average. I believe it did. Let me go ahead and turn all of these off. So yes, we did. We bounced off the 200 daily simple moving average. We still haven't closed today's daily candlestick. We had a bigger drop this morning and later last night around to around $45,000. But right now we're still above this level. And also we can see that there is some major, and I do mean major, bullish RSI divergence showing up on our chart, and this is a really good sign. Even though we have this giant correction, guess what? We still have massive bullish RSI divergence. I really do believe that in the next couple of weeks, guys, we're going to be rallying and on our way back to all-time high. I don't think this is something that we should be super scared of. I think that's exactly what the people that caused this crash, and I will say that, want us to be. They want us to be scared because a lot of these institutions are able to buy in lower because I think the big guys know that there's about to be a gigantic rally up to $100,000, and any whales working in the market are going to want to buy in lower, and I think we should be doing the same thing. Now, I want to clarify one thing before we wrap out. I am not the kind of guy, and this is not the kind of channel where I go and shout whales and manipulation, except for when it's true, and this is one of the few times in the last 12 months or so that I think I have seen this. Another case would be the interestingly timed tweets from Elon Musk several months ago, but I digress. Tell me what you think in the comment section down below. Was this manipulation? Was this a long squeeze? Do you think this was a technical correction and there was no foul business, no funny business at play here? I'd love to hear what you think. And also, guys, if you enjoyed today's content, make sure to smash that like button and subscribe to the fastest growing analysis channel here on YouTube. But before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.